Kia ora. Welcome to this week's edition of Media Insider, the podcast. I'm Shane Curry, the New Zealand Herald Editor-at-Large, and I'm very pleased to say that today we sit down with TVNZ Chief Executive Jodi O'Donnell. Jodi has perhaps one of the most scrutinised roles in media leadership in New Zealand, and I'm delighted to say that she's talked openly today about TVNZ's next 5 years, the digital strategy, the move into subscription television while still remaining an ad-funded free television network as well, and importantly just what they might be bidding for, including the Olympics. She also gives an indication of where Shortland Street might end up and what's needed to give it another year. Stay tuned, here's Jodi O'Donnell. Welcome, Jodi. It's great to have you.
Thanks, Shane.
Firstly, to have you here 18 months into the role, and today is a high point for you, coming from the Trust Awards. But you've had a baptism by fire in the last 18 months. January the 31st, 2024, you became CEO of TVNZ. I think TVNZ's, in my experience, one of our most scrutinised companies, definitely our most scrutinised media company. As you reflect on the 18 months, what have you learned about yourself in terms of everything you've gone through as a leader, as a CEO?
Most scrutinised by you anyway, Shane.
Yeah, well, that's true.
Look, I probably couldn't have predicted what would have happened if I reflect back on 18 months ago. I knew the challenges ahead for the business, absolutely, but the continued recession and advertising downturn in the market was sort of really pivotal for us having to make some critical choices. So I'm still here, so that's a good sign. And you're right, you've got to take the wins when you can. So moments like this morning are really important for us as an organisation and for us to be leaders of big teams to be able to share that with them. So it's been an interesting 18 months if I reflect back on sort of where we were 18 months ago. We had to make some really hard decisions last year. The last 12 months really have seen us deliver what has been the worst operating loss that the business has ever experienced. To also obviously cancel some really significant, long run content as well, and a really, really public reorganisation of the business. So like all businesses, you can only spend as much as you make. And so last year was really about a reset of the first year of our 5-year strategy. So that's where I reflect on where we are today. And I say that first year is just about closed. And really the next 4 years are around delivery and making sure that we continue to innovate and modernise the business.
Yeah. What do you think you would do differently? Is there anything that you look back on over the 18 months and think, I could have done that a bit better?
One of the things that I talked about with the leadership team and we all agreed on was around transparency. So we wanted to be as transparent with our people, with the media, with audiences, as much as we could because we could foresee the pain that was going to happen when we had to make some of the big decisions. So would I have done anything differently? Look, there's probably, moments that I could say actually in that point in time, maybe something that I said or something that I didn't say could have been, but I just don't think you can analyse things to that point. In essence, we said we were going to be transparent. We said we were going to communicate a lot. We committed to our people that we'd constantly tell them first. That's pretty tricky in a media business, but we have certainly tried to do that. And we've tried to be as transparent and just really clear on what the direction of the business is. Because I believe as a leader, as long as you can tell people where you're going and tell them the reasons why we need to do it, then you've got much more of a chance of the business following and knowing what it is that they can do to contribute to that. So we've really tried hard to just be clear with that transparency, clear with that strategy, and bring everybody on the journey.
Sure, and I was just reflecting on some of my own stories from a year ago when I did do a deep dive into the progress of TVNZ. And at that time, you were really open about what lay ahead, and we'll talk shortly about the 5-year plan. But I was getting told consistently a year ago that morale, for obvious reasons, was at rock bottom. Do you feel the morale now is lifting back up, that you are getting things back on track in that respect?
Yeah, definitely. And I think that the start of this calendar year has allowed us to be able to do that. So we really focused on engagement with our people and we're starting to obviously invest in training and development and invest in opportunities that we can with them to develop their skills and capabilities, because we've been really clear that this is a journey for all of us. And so being able to provide that support for all of our people is really important. We've had a couple of internal surveys which are giving us some good indications, but I like to sit down and probably hear it directly from people. They're certainly not shy in coming forward with their thoughts on things. So I would say the morale and the engagement is definitely on the improve. Long way to go yet, and I think anybody would say that.
Sure. Now, you've been balancing quite a lot of different principles. Firstly, obviously, the economic situation that we're in at the moment has, created some challenging headwinds, to put it lightly. At the same time, you're rebuilding the plane as you're still flying it. How have you been able to do that with your teams, explaining to them the different pressures and so on, taking out $30 million of operating costs? How have you been able to balance all that?
Yeah, look, I think go back to that transparency point up front is we said to our people and to the external public that we had a $30 million earnings gap for this financial year, which meant that whilst we had to make some really tough decisions around costs, I was really pleased to say that there's also been a really big focus on revenue, and some of the ad innovation and products that we've been able to develop have helped that. So it wasn't completely $30 million in costs, it was a balance of costs and revenue. So I think...
And are you there now?
I'm pleased to say that we had indicated that our end of year results, which 12 days to go, so assuming nothing goes wrong, would be between -5 and +5 million. We're on the upper end of that, so I'm really pleased with the result around that.
So that's an operating profit of almost 5 million is what you're indicating
On the upper
today.
end of that, yes, that's right.
Which indicates you've got to that 30 million.
Correct.
Right.
Yeah, correct.
Does that mean then that there's, for the near future, no more cuts?
Look, I don't have any intentions today to say that there will be more cuts. Cuts will continue to obviously focus on the business as it transforms. But what's really important for myself and also for the leadership team is to be clear that we can say the business is back into a stable position. And that's what we wanted to be able to do this year, was to bring the business back to at least profitability or break even, because we're now about to start our investment journey. So we've started it already, but over the next 2 years, that's where you'll start to see our significant capital investment, which is self-funded, and that will be funding our digital transformation. So the operating base of the business is stable, but what you will see for the next 2 financial years is the business going into red as we invest in our capital. So it was important that we got back to that operating base that was stable. Effectively, I use the language before you earn the right to invest in your future capability.
I get that, and we will delve into that very shortly. In that chair 3 weeks ago, though, Paul Goldsmith, the Minister, said very clearly TVNZ still has a long way to go in terms of its operating financial performance. Do you agree with him on that, or is it...
We have a good engagement with the Minister, and I meet with him regularly, and so he knows exactly where our business is at. And I met with him probably last week, actually, and so he's got the very latest information in terms of where the business is at.
Did you put him right?
No, he's not wrong, because our business has been changing over the last 6 months in particular. So absolutely, he's not wrong. He is clear about the fact that he knows the business has investments over the next 2 years, and therefore it will look like, from a one-line perspective, that the business is in red. But it was really important to demonstrate to him, being our shareholder, that actually the business is stable now.
Will there be a dividend this year?
That's a discussion that we have every year. It's a discussion that we have with our board at the end of the financial year, and so I'll let you know if that decision is made.
But are you expecting... He's expecting dividends within the next 2 or 3 years. Is that something you can commit to today?
He's made that clear. I'm not going to commit to anything, because every year it is an assessment that we do at the time. The last time we paid one was in FY22. We paid a $15 million dividend, and every year we go through that same process.
Do you think... you talk a lot about the tech giants, operating in an uneven playing field, but TVNZ also has an unfair advantage amongst some of the other commercial media companies, right? And that you don't have to return at the moment, or you're not returning at the moment, a dividend. Do you think that puts you at an advantage over the likes of a Stuff or an NZME? Or
I would say that TVNZ invests the most in local production in this industry. So that's our contribution to the industry, and it's really important that we continue to invest in the local industry. So it's a balance between actually paying a dividend or being in a surplus situation, investing in local content, and ensuring that we do continue to tell those stories and have opportunities for content to be available for New Zealanders. So it's a balance between all of those things.
because as a chief executive, and I know the taxpayer doesn't fund directly TVNZ, but
good point, Shane.
But,
they don't.
I like to reiterate it all the time on
Thank
behalf
you.
of TVNZ, because I think it is a misnomer, if you like, that
is.
the taxpayer funds TVNZ directly. You're funded commercially. Nevertheless, the taxpayer does own the company and expects a return. As a chief executive, is that front of mind, first and foremost?
My previous role was head of revenue, so I'm very much aware around the revenue responsibilities of the organisation. So yeah, that's a tension that we walk each and every day. And the minister has made it clear that he wants TVNZ to return to profitability and be in a position to pay a dividend, and that's exactly what we focused on doing.
Let's talk about the investment over the next, well, what is it now, 4 years with the 5-year plus digital plus strategy. It's very exciting. I mean, you've taken me through it in depth over the last 12 months or so. Part of it is a big technology change, part of it's a cultural change. How's the first year been? Are you on track with it?
We are on track. The first year is what I'd sort of call the reset, so it's almost kind of the end of the beginning. And this year, the next financial year, which starts in 2 weeks, we'll really be focused on that deep investment. So all the planning's in place, some of the work has started already, and we're pretty excited as a business to be able to see actually the things are now starting to come to life. So that's what we'll be most talking about over the next 12 and 24 months.
So to bring it to the listeners and the viewers who are watching and hearing you today, tell us how things will change. TVNZ Plus will be rocket boosted, right?
It will be rocket boosted. So in the next 12 months, what you will see as a viewer is, whilst behind the scenes, there'll be a brand new TVNZ Plus platform. For the viewers, you'll be able to see much more enhanced and sophisticated user experiences. So more personalisation, serving up content that it is that you want to watch, more opportunities to house content. So we've got some fast stand-up channels at the moment, but we'll be able to do a lot more of those types of partnerships going forward. So that's really important for our viewers, and it's the surfacing of content that will be really important for them as well. And then also advertisers, equally important. They'll see more ad innovation products, so more ways that we can use the data around the behaviours of what people are doing on the site to be able to ensure that we can also return revenue, which means we can continue to keep, fuelling the business, so to speak.
You haven't mentioned the ability, very shortly, to have subscription television and pay-per-view, I guess, but that is on track as well for the next 12 months?
All media organisations are thinking about diversifying their revenue, so while we're investing in this new platform, we absolutely need to build in the pay functionality. So that will be the case.
In the next 12 months?
That will be the case in the next 12 months.
Right.
So that's a really important part of refreshing and modernising our platform to ensure that we've got diversified revenue options in the future as well.
But it also means you'll be able to compete more evenly with a Sky TV for sports rights.
Look, I think it's really interesting when you think about pay TV, and sporting rights is an interesting one because it's really hard to monetise that in an ad-funded environment. So that would be an opportunity for us to think about how we could unlock some pay capability. The way that we're thinking about it though is a market of 5 million people, another subscription service is probably not what New Zealanders want, but the ability to scale up and scale down pay, whether it's for events or one-off things, is sort of the way that we're thinking about it, because we think that's the best way for us to optimise audiences and revenue as well.
So initially, at least, that would be the strategy, I guess. But in 5 years' time, when the new rugby deal comes up for grabs again, TVNZ could be in their boots and all?
Look, first and foremost, we're an ad-funded business, so that's what we will always remain to be. But being able to compete for rights like that, we've not been in a position to be able to do that today. In the future, we'll hopefully have that capability.
So can you give an example, maybe in the next 12 months, what we might see on a one-off pay-per-view? Is it a one-off sporting event? I don't know.
I'll give an example. It won't necessarily be in the next 12 months because that would not be wise of me. But if you look at something like the Olympic Games, for example, the ability for that to be brought to New Zealanders so they can watch it free, but the ability for us to compete for those rights means that we need to find some different revenue options as well. So that might be an option that you'd think about, an Olympics pass, for example. So that's
you
probably
could have 12 other channels of specialist sport.
Potentially.
With a free couple of channels or...
That's exactly right. So it's the balance between what New Zealanders want to see and expect to see from TVNZ, and then how we can deliver the revenue or the commercial value that we need to be able to compete for sporting rights in that example.
So the Olympics are interesting because you funded your own way to Paris, right? to the Paris Games. Are the Olympic rights something in your target?
There's quite a few sports rights in the market at the moment. We haven't been shy about our ambitions around that. We've put our best foot forward. I don't have anything to share with you today.
But that includes the Olympics. You're in there.
There's lots of sporting rights available in the market at the moment.
Take that as a yes. Well, no, it's exciting, right? And it's exciting from a media perspective that there is stronger competition locally for events such as that. Just on rugby, there's been reports in the last week that TVNZ is going to be a free-to-air partner on NPC rugby. What can you tell me about that?
I don't have anything to announce today, Shane. But as I said, we have put our best foot forward with lots of rights, and if I have any answers, then you'll be the first to know.
Oh, that would be good. But with Sky and with NZR, there's clearly now the opportunity to collaborate a lot more. We've seen that with netball. We've seen it, TVNZ's had the cricket for the last 2 years. You've got it for another season. Is that collaboration, given all the challenges facing all the different commercial media companies, do you feel the collaboration is now starting to occur a lot more frequently?
Yeah, look, I think that there'll always be opportunities to compete, but we also need to find ways to collaborate. So I think that's probably a really good demonstration of how TVNZ can partner with other types of commercial businesses as well.
Mm-hmm. Mm. Is the government a good owner of TVNZ?
Oh, that's a deep question. Look, the government's always been the owner of TVNZ, so I don't have any other perspective in terms of, what it would be if it was owned by a private company or not. They're very good in the sense that they understand their obligations around independence. So what I would say is we have a good relationship with our minister. We meet regularly. He understands our challenges and the opportunities that government can lean into from a regulation perspective. And we'll continue to operate that way with them.
Because I think about the balance, we talked about the balance earlier, but you are set up as a commercial operator, but there must be that difficulty at times balancing that tension between the public broadcasting versus the commercial return. Can you give an example of where investment in, you might have a great show that works from a public broadcasting perspective, but does nothing at all for your bottom line?
Yeah, and that's something we've had to really focus on, particularly over the last 18 months, is the shows that deliver us audiences, therefore a commercial return, are really important. And so when we think about our investment in content in particular, we invest over half of our content budget into local. What that means, though, on screens is it turns up in less than 20% of the content on screen. And that just gives you an example of the economics of local content. And so our international, the expense of it, that's right. And so the importance of our international output deals as well really helps us balance that. So we'll continue to find ways that we can also unlock more value. So news, for example, is a really good example of actually, whilst we made some really hard decisions last year around news, being able to spin up more news on TVNZ Plus that looks at in-depth investigations is a better way for us to be able to monetise that, and it gives the viewer much more choice as well. So we're just thinking differently around the local content that we have. Shortland Street's another example. Obviously, we made the decision this year that we would have 3 episodes a week. We're testing and learning around how the best ways are to schedule that, particularly in our digital streaming platform TVNZ Plus, and we'll continue to try and learn around that because local content is gold. It's really important for viewers. They love it. We've just got to balance those commercial realities of it.
What are you learning from the 3 episodes a week with Shortland Street then, digitally and terrestrial?
Look, it's still doing really well, which is great. What we're testing with is trying to also build out some additional content around it so that, at the moment we've got, more behind the scenes content with Shortland Street, which is just a great way for viewers to connect so that if they have lapsed, then they're coming back or they're engaging with our content in a longer form environment on TVNZ Plus. So it's working well so far, and we'll just continue to keep testing and learning because, audiences change, the market changes, and it's a really important part of our schedule from a broadcast perspective, but also it's really part of our streaming platform as well.
But overall, our audience is actually drifting away because of the less frequent episodes.
Because there's less episodes, then yes, there are less audiences, but in terms of a like-for-like, audiences are still strong for Shortland Street.
So will it be back next year?
That's our hope. Yeah. Look, no, in all seriousness, Shortland Street is a great piece of content, and every year we do go through the investment round with it, and that's a position that we're in at the moment.
So you will be approaching New Zealand on air for
We will be
funding
approaching
for
New Zealand
next year?
On Air for funding for next year, yes. And look, full credit to New Zealand On Air who have definitely contributed this year, which is really important. And I think that Shortland Street has been identified as a piece of local content that really does fuel the production sector, up and coming actors and whatnot as well. So we acknowledge that.
So New Zealand On Air gave $3 million for this year's episodes. Do you need that? Is that what you're applying for again this?
I can't share what we're asking for this year, but we are talking to them around it and around the economics of it, yes.
If New Zealand On Air doesn't come to the party, is that the end of Shortland Street?
That's a decision we'd have to make at the time.
Because that's, TVNZ, is it fair to say, still invests significant millions of dollars into Shortland Street.
Yeah.
Even though you've had this support from New Zealand On Air with the SPR, it's still, for you, is it profitable if you didn't have that New Zealand On Air?
It would be profitable if we didn't have that New Zealand On Air.
Wouldn't be?
It wouldn't be.
Right.
No.
So at the moment it does make a margin, just? Right. So that's a tough decision to make then if New Zealand On Air doesn't come to the party.
Yes, and I don't want to put them into any pressure because at the end of the day it would be our decision. So just to be clear on that, it would be our decision if that was the case. But yeah, these are the types of decisions that we're having to constantly look at and balance.
In this current day and age and in the current economy, can a commercial company run a loss-making show?
Well, that's what we really transparently shared last year is that we can't. There might be strategic reasons why you might invest in a piece of content that was loss-making, but for 99% of what we do, we have to be able to return a profit or at least be able to demonstrate that we are bringing in audiences, if not to that piece of content, then to the platform in general. Because sometimes it's not also just about that piece of content, it's around what it means to hold up the whole platform or to be able to contribute the audience demographic splits across different types of shows.
And then I wonder, as an executive team and as the chief executive, do you sometimes step back and have you got the time and the headspace to think, what is going to be our next Shortland Street? Are you trying to find the next big thing?
Thankfully, I have experts in the team that are doing that all the time. So they're constantly looking at audience data, global trends, local trends, and just talking to people as well. So we've got a great bunch of people that do that on a daily basis.
So you've got a new look executive team forming. Nadia Tolich is coming from Stuff. Doesn't have, I know Nadia really well, such a fantastic leader. Great on the journalism side of it. Less experienced, I think, on programming, but can you tell me a little bit about her and some of the other executive changes you've made?
Yeah, well, look, yes, she does have a really strong news background, but she actually does have a broader background as well in terms of content, so has held content director roles in particular. And let's not forget, we have an incredibly strong leadership team underneath that as well. So you've got very experienced individuals that head up our news and content teams that have been doing this for a very long time. So she is a fantastic leader, you're right, and we're excited about her joining, but we've also got incredible talent in the business already. So I have great confidence that, if there are areas that might not be necessarily as strong for her, we've got people in the team that can do that.
And, that you've reduced your executive team down, I guess, by a couple at least. Do you sense now you have got the people around you, or will there be any further changes in that leadership area?
Yeah, look, you're right. The team is forming in the sense that they haven't joined yet, so it won't be towards the end of the year till the team are fully operational. But yes, making sure we've got the depth of capabilities across different experiences is really important, and also thinking around the cultural changes as well that we've got ahead of us as a business. I'm excited with the group that we have coming into the business, but equally with the team that we've had, they've done an amazing job with us and for us. So that's got to be recognised as well.
I want to talk about 6 o'clock news. We touched on it earlier. Still hundreds of thousands of people a night are watching.
1 million every night, Shane.
There you go. There you go. And that's through not just terrestrial TV, but through TVNZ Plus streaming as well. What is the future of 6 o'clock news in terms of, will it always be there? For the foreseeable future?
I think for the foreseeable future, yes, it will be. When you're seeing audience numbers like over 1 million every single night, then clearly we're still doing something that's really important to New Zealanders. And so that'll be something that we look at every single year when we go through all of our content decisions. But at the moment, we're seeing audience growth at 6 p.m, and I appreciate the environment has changed, but actually...
Is that at the expense of 3?
There were some changes that definitely we saw last year when there was the shift from 3, and full credit to staff for picking up the production of 3 News. I've always said I like competition. Competition's really important. So from that perspective, yes, we have seen some growth. But what's increasingly impressive to me is actually the growth is coming on our streaming platform, TVNZ+. So people are still watching it live, but they're watching it live digitally. So they're watching it through the app, and that's definitely our biggest growth platform. So that's encouraging to go, people still want to watch it, they're just thinking differently about which platforms they watch it on. Or with the strength of the additional clips now with news on TVNZ+, people can catch up on the bits that they want to watch. So we are seeing an increasing appetite for people wanting to consume news. Video news is where it's at. And so that for us will be something that we'll constantly assess. But right now, it is still, the biggest part of our content schedule where people come into our platforms.
Lots of speculation about the future of Simon Dallow. That he may be coming to the end of his time as the 6 p.m. newsreader. What can you tell us about, succession plans?
We don't talk about any of our employees like that. So again, I don't have anything to share in that space.
But it's fair to say you've got succession plans?
We have a lot of talent in our news floor that, I enjoy when I turn on the TV in the morning and I'm watching breakfast, and there might be the team that normally are there, or there might be new teams that are on the couch. And I think that's testament to a newsroom that's developing and growing people as well. So we have a raft of presenters who we schedule differently across the day within our different news bulletins.
And if it is to be, and it's me saying this, not you, but if it is to be Simon's last year as the newsreader, what can you sort of talk about the skill set he's brought and the impact he's had?
Simon's an incredibly high trusted presenter, and I think that's something that we constantly see in all of the research that we have as well. He's always been very clear that he reads the news, and that is his job. It's not to have for him to add a perspective, and that is full credit to a really strong presenter, particularly in that news space as well, to deliver the story and let the individual be able to make up their decision on what they want to take out of it.
Sure. The 6 o'clock future you've talked about, but it does lead into the bigger inquiry around the future of terrestrial television. Is it still a likely switch off in 5 years' time?
I've always said that by 2030, I believe we should have the optionality around that. But, guess what? TV is still going really strong. And this year, we see that 2.5 million Kiwis are watching every week. And in fact, our TV audiences are growing. So it's still got a lot of life left in it. We'll continue to make those assessments. But what was important from our perspective was that there was a point in time that we would have that option. And that's something we'd obviously have to work really closely with the shareholder around if we were to ever think about making one of those decisions.
Because transmission costs are huge, right? They're a big cost line for TVNZ.
Yeah, they are. And when you're running a business as well that is seeing decline in that base, which, like I said, we're not at this stage, but when you do start to see those declines, you've also got the growth part of your business being digital and the streaming platform TVNZ+, where you've got costs growing. It's really hard to manage that. So you're right, those fixed costs, whether 5 people are watching or 5 million people are watching, are the same. So that's something that we're constantly working with our partners around as well.
And then I guess a massive public education campaign would have to be undertaken. Although, in 5 years' time, would it be fair to say that, as the population ages, there'll be a lot more digital savvy 70 and 80-year-olds?
Yes, I expect there probably will be, yes, or lots of phone calls to children and grandchildren to come and help educate. Yeah, but you're right, there'd be a very big campaign around that if that was the case.
Yeah. And just to round out our conversation today, RNZ's about to move in. Are they still coming? Are they still coming in?
Absolutely, yeah.
They've got their own.
As far as I know,
they've got their own cost-cutting pressures as well, of course. But
yes,
where have you spoke? The minister has made it clear that he expects to see TVNZ and RNZ collaborating a lot more closely. What have you told him, and what have you told your team?
Yeah, look, I think that when they get in the building, that will unlock some more opportunities for us to collaborate. We've dabbled in a couple of things over the last few months where we've tested a few partnership or collaboration opportunities, but I think there's nothing better than actually being in the building to be able to find ways that you can collaborate.
What have you said to Paul Thompson, the CEO of RNZ? Have you got some ideas already around?
Yeah, we've got a couple of ideas, yeah.
What can you tell me?
I can't tell you anything yet, but yeah, wait and see.
Yeah. And Jodi, just to round out our conversation fully, we'll come back to the trust and the survey results this morning from Kantar, fresh off, you're fresh from the event and speaking there. That must give you good hope in terms of the general overall future of media and rebuilding those trust levels.
Yeah, no, it really does. And, whilst we think about we need to halt the decline in trust, that's one part. And then the next part is how do we grow it again? And again, I go back to that insight around giving viewers more choice, giving them options for what they want to watch on their terms, I think will be a critical part of trust in media, but particularly for us with TVNZ.
Great. Jodi O'Donnell, thank you for joining us.
Thanks, Shane.